Good morning and welcome to the ADS Securities Markets Update. The Asian session today had only one economic release from Australia, which had a slight impact on the markets and especially on Aussie across the session. The construction work done in Australia showed a sharp decline again by 2.2% in the third quarter of this year, comparing to another decline of 1.2% in the second quarter of this year as well, while the estimates were to decline by 1.7% only. However, this is the second quarterly decline in a row and the biggest decline since the second quarter of last year. And the Aussie fell slightly toward or following the news, reaching as low as 85.20s down from 85.60s, while the downside view is likely to continue toward 84.92 followed by 84.38 later this week or next week. As for the European session ahead, there are three economic figures will be released from the UK, which may have a notable impact on the British pound and may continue the upside or may continue with its upside corrections. The GDP, the second estimation for the GDP is expected to remain unrevised at 0.7% in the third quarter of this year. However, the business investment is likely to show some slowdown again toward 2.3% in the third quarter, comparing to 3.3% in the second quarter, which would be the first decline since the second quarter of last year. Finally, the CBI realized sales may decline slightly toward 28 in November, down from 31 in October, which would be the fourth monthly decline in a row and the lowest reading since June of this year. As we're going forward to the US session today, there are a collection of economic figures will be released from the US, which is likely to have the biggest impact on the markets today, especially after the upward revision in the third quarter of GDP toward 3.9% from 3.5%. However, the consumer confidence fell to 5 months lows yesterday, and the Richmond Fed Richmond Fed Manufacturing Index fell sharply toward the lowest level since June. As for today, the durable goods order is expected to decline by 0.4% in October, comparing to another decline of 1.1% in September, which would be the third monthly decline in a row not seen since 2011. However, the core durable goods orders is expected to rise by 0.5%, comparing to a decline of 0.1% during the same period. The weekly jobs claims is expected to decline slightly toward 287,000 last week, down from 291 the week before. Moreover, we'll be watching the personal income and the personal spending, and both are expected to rise by by the same rate of 0.4% for the month of October. Last but not least, the new home sales is expected to rise slightly toward 471,000 in October, up from 467,000 in September. And finally, the pending home sales is expected to show the second monthly increase in a row by 0.9% in October, comparing to another rise of 0.3% in September. These are the economic releases for today, and this is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching, and keep following us on our social media, as we will be sending new signals and new potential trades for the market during the day. This is it for today. Again, thank you for watching and have a good day.